Hi, everyone. How are you? Hope you are well. So, as you come into the room, let me know where you're from. Let's make this interactive. So, put it in the chat where are you from. So, I'm going to talk about the housing market. So, the housing market, the mortgage rates, they have jumped to 6.32%. I know that's not a surprise to anyone, but I'm just going to talk about the latest updates and what is going on in the housing market. So, the inflation, they make the rates more volatile. So it's expected that the rates may go from 6 to 7% range over the next few weeks. There was this jump to 6.32%. Last week, the rates were 6.12%. So this week is 6.32%. So there was a little jump there. A year ago, it was 3.92%. So the mortgage rates are about 2% higher than they were in comparison to last year. So the job reports came out, and the job reports are stronger than what is expected. There are over 517,000 jobs that have been added, despite what is being reported in the media with all of these massive layoffs, especially in the tech industry. Um, According to the media, there is a lot of layoffs going on. However, according to the jobs report, there has been 517,000 jobs added. So the jobs are plentiful. There are plenty of jobs out here, even though the media is reporting the reverse picture. So, according to the Consumer Price Index report, it showed that inflation is only moderately easing. So, for people with less than ideal credit, they're going to charge you more than what everyone else is paying. That's why it's so important to work on your credit and make sure that you have a good credit score. So that is the reason behind taking care of your credit. They're going to be charging you more than everyone else. So the rate is 6.32%. But if you don't have an ideal credit card, they're going to charge you more than that 6.32%. And that's how the system works. As long as you are aware of that, and how do you get an ideal credit score? You get an ideal credit score by paying down your credit cards. So when you pay down your credit card debt, your credit score goes up. So what you don't want to do is you don't want to pay it down to zero. Because what's going to happen if you pay the complete balance off to zero, they are going to cancel your card. And so then you're going to be wondering, why did you cancel my card? I'm doing everything that I'm supposed to be doing. So they do want you to maintain some debt on that credit card. Preferably, it is less than 30%. Less than 30% is good. However, less than 3% is best to get it up to that 800, 850. So that is the importance of good credit. Like I said before, if your credit is not good, they're going to be charging you more than everybody else. So the feds, they plan on raising the rates by 25 basis points. And so 25 basis points, what does that mean? So what that means is 0.25%. So why don't they just say that? So they say 25 basis points, it means 0.25%. So I'm going to get my little calculator out here. And so currently, the mortgage rates are at 6.32. So they plan on raising it by 25 basis points. So you're going to add 0.25, and then they're going to add it by 25 basis points again. So that is 0.25. And that's what they're doing over in the feds. That's what the feds are doing. So they plan to increase it by 25 basis points two more times as of yet. So the rates are 2 percentage points higher in comparison to last year. Last year, the mortgage rate was 3.92%. And as of today, it is 6.32%. So as you know, a higher mortgage rate means a higher monthly payment. So they have noticed a decline in applications for homes. A lot of people are not buying homes at this point in time. However, the banks and the hedge funds, they are buying up all kind of single family homes all over the place. So for the general public, the mortgage rate is 6.32%. However, if you are a first time home buyer and you're interested in buying your first home, there are programs that are available to you. One example is NACA, NACA. They are legit. They are a legit program. Their goal is to help you to get your first home. And so they are helping you. No scams, no hidden agendas. So it's called NACA, NACA. So the benefit of NACA is no down payment and no closing costs. Also, a lower rate. So where everyone else is paying 6.32%, you have head over to NACA. NACA is going to charge you like 4%, 3%. So you're paying a lower rate than everyone else, which translates into a lower monthly mortgage. So you can have a very nice, beautiful home in a nice, beautiful area, paying a lower monthly mortgage than all of your neighbors. And so there are programs out here like this. The name of it is NACA. That's one program, NACA, especially if you are a first time home buyer. Their goal is to help you to get your first home. So if you are in the housing market and you are interested in getting your first home, and in this period of time, they talk about inflation, high interest rates, high mortgage rates, don't be discouraged. Don't be hindered because there are legit programs out here, and NACA is one of them. Not only is it legit, they have additional benefits like a lower rate than the general public. So don't be discouraged if you are a first time home buyer. So what I'd like for you to do is let me know in the comments, what do you plan to do? Do you plan to wait this thing out? Because you know the plan is that they're going to keep increasing the rates. That is the plan. So let me know in the comments, do you plan to wait this thing out? Do you plan to work on your credit, wait a few months until your credit is excellent? Or do you plan to head over to some of the programs that I mentioned? Do you plan to actually start the process of buying your home, or you're going to wait? Let me know in the comments, what do you plan to do in this time of the housing market? You know, this is a very uncertain time, but they already told us that their plan is to keep increasing these rates. So in history, the rates have been high, even higher than this. They have been up to as high as 18% in the past. And they also have been as low as 2% a long, long, long time ago. So, as I said before, right now we are at 6.32. So let me know. Are you going to wait it out? Are you going to work on your credit, get your credit up? Or are you going to start the process of buying your home? Are you going to head over to the program that I mentioned? What are you going to do? Let me know in the comments. Also, please hit the like button. It helps the channel. If you're not a subscriber, please hit the subscribe button and notification bell next to it so that you won't miss the episode. Also, if you are not in the stock market, click the link below. I'll help you get in the stock market. And if you're interested in buying rental property, building up a rental portfolio, click the link below. All right. Thank you for watching and have a good rest of your night.